WEEK39. Starting our research, having a look at the European bond market. This week there will be a net negative euro outflow of over 23 billion euros. That should keep euro elevated more or less. We also have month-end rebalancing pointing towards dollar bearishness, so towards the London fixes, specifically towards the end of the week. We're looking for a little bit more supportive price action in the euro. Going to October, net effect will be over 20 billions for October, will be positive cash flow, so that should hurt the euro in October. Moving ahead, having a look at the CFTC report from the Scotia Bank, there was an interesting development in their pound positioning. So 2 weeks prior, things started to look really bright and there was a huge bullish build-up that got repriced after Brexit negotiations started to fall apart. And in this report we're finally seeing that things got leveled. However, going forward, we can see short positionings are continuously climbing. They should pressure GBP further. However, it doesn't look like we're going to have those aggressive moves we saw 2 weeks ago. Because basically, 2 weeks ago, the moves were more aggressive because of the massive long position that was squaring out. But going ahead, we are looking for more GBP bearishness as short position continue to build to price in more GBP Brexit risk. Similar moves that we've seen in June. On the euro side, we've seen all August longs have not been adding, and then they started to actually take some long positions off, where shorts were more or less holding steady. So that means we should be bumping about in the lower part of the range in Euro USD, about 117 area. Interestingly, AUD found a huge bullish bet. It's over $1 billion in positive territory. That reflects China expansion, positive higher copper prices as well. It's really helping Australian dollars. So we're probably looking to see how we can plot the GBP against AUD to catch some more downside in this week and going further out in the year. Having a look at the economic calendar, there is not a lot interesting happening in the beginning of the week, but on Wednesday we will have a little bit more traction. So we'll have the official bank rate statement from New Zealand. Nothing is expected as of now. So the price action and the moves around you now will be more tradable after that event. But on the day itself, we have French PMIs, German PMIs, whole euro area, and UK and also United States. We get our flash manufacturing PMI. And PMIs tend to be very interesting in nature for a lot of markets. Specifically, right now the focus is with AUD. So higher PMI means more manufacturing is happening, more raw materials are needed, and raw metals as well. Specifically metals like copper and iron gets used more up in the manufacturing process. So we want to see a good trend continue, and the Wednesday data will be an opening to start shorting GBP AUD again. I'm going to bring up the GBP AUD chart. We already had some massive down moves, and we're starting this Monday already on a negative tone. Not expecting the beginning of the week to create bigger leaps down the way. We're more looking for is once the data is due on Wednesday, we want to see a continued trend of good manufacturing data, the overall growth to continue. If you start stalling, the whole story could change. GBP AUD tends to find a mini trend after the PMIs are published. If we were to go back in a couple of other readings before that, you would see that it does cause sizable moves. So the US PMI last time was published, for instance, the 21st of August, 24th of July. And if you have a look at your chart, you find that there are some massive moves around the 21st of August. GBP AUD found the top, and around the 24th of July it found the bottom. So it always tends to create massive moves, the PMI numbers. But instead of front running it, we'll be more cautious. We'll wait and see how the data comes out. Overall bearishness in GBP is very resilient. There's less upside for GBP and more reasons to sell it. ideally against AUD, as there's more lucrative downside if these data hold up their side of the equation. For the remainder of the week, there's not a lot on the data side that we're interested in. There is a Fed chair testifying, also Treasury Mnuchin. That could mean a little bit more upside for the indices. I'm particularly interested in the S&P 500. What I am looking for is a rebound into these levels to start shorting and holding into the November election. That's the US presidency election. But I'm not expecting these lows to just keep dropping away. We should see some sort of a rebound back into ideally 33.97 and then explore more downside. That would be an ideal play for me to short and hold. And lastly, it's Euro USD. Throughout the week, keep an eye on the 4 p.m. London fixes. It is expected that Euro USD and all the other USD pairs should find a bid as month-end rebalancing points increasingly add a bearish USD picture. That'll be all from me.